Imagine a future in which there is no possibility of creating fresh Bitcoin. It sounds futuristic, doesn't it? It's closer than you may imagine, however. There are only 21 million Bitcoins in the world, and we are getting closer to that number every day. When the final Bitcoin is mined, however, what will happen? Will miners be laid off? Will Bitcoin's value soar or plummet? In this video, we'll explore the startling repercussions, mining's future, and its actual significance for the cryptocurrency industry. 1. Understanding Bitcoin's limit. With the groundbreaking concept of a decentralized digital currency with a fixed supply, Satoshi Nakamoto founded Bitcoin in 2009. In contrast to fiat currencies, which are printed indefinitely by governments, Bitcoin is strictly limited to 21 million coins. What makes it digital gold is its exclusivity. Currently, miners use a process known as mining, which entails figuring out difficult mathematical puzzles to issue new Bitcoins. Newly created Bitcoins plus transaction fees are given to miners each time they successfully validate a block. The halving occurs about every 4 years, so this award isn't permanent. There are now fewer than 2 million Bitcoins remaining to be generated after more than 19 million have previously been mined. 2. Miners' impact. The foundation of the Bitcoin network consists of miners. As of right now, they get compensation in the form of fresh Bitcoins, in addition to confirming transactions and protecting the network. Miners are encouraged to keep verifying transactions even when block rewards disappear, since every transaction on the Bitcoin network has a modest charge. However, significant changes can result from this adjustment. Miners may quit the network if transaction fees aren't sufficient to pay for their expenses. This alteration entirely reduce the security of Bitcoin and lessen its decentralized character. However, if Bitcoin's value rises sharply as a result of its scarcity, transaction fees may become very lucrative, which would keep miners motivated. 3. Impact on Bitcoin's price and scarcity. Value is determined by scarcity. One of Bitcoin's most significant characteristics is its limited supply, which will peak after all 21 million coins have been produced. Since there would be no more coins, demand will directly affect pricing without the inflationary pressures that come with fiat currency. Both long-term growth and high volatility may be experienced by the pricing because of the limited supply and increasing usage. But price stability is not ensured by scarcity alone. Technological difficulties, legislative changes, and market behavior will all continue to affect Bitcoin's value. The demand for Bitcoin, for example, may be influenced if governments enforce stringent rules or establish alternative digital currencies. Furthermore, every transaction and Bitcoin transfer becomes significant, as there are no fresh coins coming to the market. The whales, or large Bitcoin holders, may have greater influence over price fluctuations. Additionally, the scarcity effect will increase competition for transactions with reduced rates, which might have an impact on small-scale customers. 4. The future of Bitcoin network security. Miners are essential to the security of Bitcoin. They prevent fraud, including double spending, and verify transactions. At the moment, miners are encouraged to maintain this security by mining incentives. However, what happens when block rewards stop? Transaction costs will take precedence over other incentives, but the situation creates ambiguity. Network security may be compromised if fees are too low, since fewer miners may participate. Bitcoin may be more susceptible to assaults if the network is weaker, although large-scale attacks are still improbable and costly. However, as Bitcoin's value rises, the network itself becomes a more desirable asset to safeguard. 5. Implications for users and investors. All investors and users will be affected after all Bitcoins have been mined. The scarcity of Bitcoin may make it an even more alluring investment for long-term holders. The idea of digital gold, which would provide a buffer against conventional currency inflation, will come to fruition. Transaction costs could start to stand out more for regular customers. At the moment, block rewards help partially offset transaction costs. In the absence of fresh Bitcoins going into circulation, users could have to pay somewhat higher fees to guarantee that miners quickly authenticate their transactions. However, advancements like second-layer networks and batch transactions may help keep prices down. Additionally, investors can see heightened market volatility. Larger price fluctuations might be triggered by even little changes in demand, as there is no new supply entering the market. Bigger earnings might result from this, but speculative traders run a bigger risk. Furthermore, Bitcoin's place in the global financial system may grow. It may be used as a reserve asset by institutions more often, and countries may investigate incorporating it into their monetary policy. The durability, uptake, and value proposition of Bitcoin will be put to the ultimate test in the post-mining period. Conclusion: the mining of the last Bitcoin will mark the start of a new era rather than its conclusion. The network's security will depend on rigorous technical and economic balances. Miners will be dependent on transaction fees, and value will be driven by scarcity. Bitcoin is a unique digital asset that is unlike anything in conventional banking because of its limited quantity. It is imperative that miners, investors, and consumers adjust to this future. Market instability, increased fees, and scarcity will characterize Bitcoin's post-mining phase. However, the scarcity, transparency, and decentralization that made Bitcoin revolutionary will continue to influence the world's financial system. You can be ready for the changing Bitcoin environment and make wise judgments if you are aware of these developments. Even though the last Bitcoin mining was over a century ago, the decisions we make now will have a significant impact on how long this groundbreaking digital money survives. Thanks for watching. If you enjoyed this video, don't forget to hit the like button, share and subscribe for more updates, and comment below. How do you think Bitcoin's value will change after all coins are mined?